Get some more reaction from our jobs panel. Steve, what's your first takeaway here?
It's a very good number. The jobs market, as we've talked about, the economy was strong going into this. And I think Rick is right when he points out we want to know where we were. You take a half-point hit to GDP, which is the best estimate, not the best estimate, but the consensus estimate, I think, among economists for the hit from the coronavirus. I'd much rather take it at 2 or 2.5% GDP than at 1 or 1.5. I'd much rather take it with jobs surging. Now, this is the place I think you're going to see it if you are an employer in this market where it's been tough to find people. The first thing you would do, I would believe, would be to delay hiring. You wouldn't necessarily fire. So that's the first thing I would look for it to show up here in the transportation area, leisure hospitality, perhaps in education. That's something we'll have to watch. Jobless claims as well as at the end of the month, the jobs report.
Right. How much is this going to make people feel better about anything?
People feel, I think, to Steve's point, that we're starting at a solid base, but we were at a solid base. The economic data looked just fine before we started to get really concerned about the impacts of the coronavirus. The one thing that we've been talking a lot about is, what happens in the service economy, and particularly if people are not going out, if they're not going to restaurants, if people are not getting tips and extra wages, does that lead to softer second Q in terms of overall consumer spending? But I don't think it's going to be catastrophic, and we're going to need to look through the noise a little bit, even as analysts and investors are having a hard time pricing in the impact to earnings. So we're starting from a strong point, expect things to get softer, but catastrophic, I think, is not really in the cards.
There's two groups of people. One say we are the entire country is overreacting. There's that group, and there's the other group that says this is going to be much worse than any of us believe. Do you think this gives any credence to the group that says there has been a giant overreaction, or it's just too old to have factored into the equation yet?
It's a little too old. I think it's too soon to tell.
So we shouldn't say, see, this was not. There are a lot of people, we hear from both sides.
You can say that at some point, Joe, but this is, just so you know. I'm saying the facts on this are that it's February 12th, right? It's the week ending February 12th.
Okay.
I think we started to freak out about this, and freak out maybe what we're doing. I acknowledge that towards the end of the week.
We're definitely freaking out. It's just, is it warranted or not? That's what we don't know.
I mean, the number.
There will be people that say, see, I told you so.
Right.
I see it on Twitter all the time. They're like, what are you people,
More interesting is that it didn't show up in the jobless claims number. I would have thought that was the week ending February 29th. I would have thought it would have shown up there, but it hasn't yet.
Yeah.
Use this as evidence that it's all hyped at your own risk. I don't think I would.
Let's be available for that possibility.
The market's not
moving at all.
Didn't go
not
from
budging.
minus 750 to minus 200.
It is interesting, the trade gap numbers. Rick, did you get a chance to look at those? The trade gap falling could be a sign of declining imports, I would imagine. I have to look at the details of that. Did you get to see it, Rick?
Yes, it was minus 45.3 billion, and in the rearview mirror, we had a very subtle revision lower to last month. So it is about $1.5 billion below the expectations on this trading floor. And as you pointed out, it's hard to get GPS on any of these numbers. I was shocked that yesterday's initial jobless claims didn't have a more reflective move of the current environment. And as to today's report, I think there's three areas that we have to hit hard. The average work week, that was a very nice expansion. We'll talk about that throughout the day. 1/10 is worth a lot of jobs. The earnings, both month over month and year over year, were very nice, and we didn't lose any ground on participation or labor force LPOP. And I think those are the good news. But, Steve, you're exactly right. How we walk away from this, maybe the employment doesn't get as affected as we think, but there may be many other areas that we don't suspect would be, that maybe it's just very hard to find an anchor at this point.
Furman, you've never met a Keynesian stimulus package that you didn't like. Any second thoughts about whether we really need one right now? I thought you were so worried about the tax cut in a full employment economy. I thought you were so worried about overheating already. But do you have some shovel-ready projects at least this time, or are we going back to cash for clunkers? What do you want to do exactly with your big stimulus?
I think the economy looks perfectly good in the rearview mirror. This pace of job growth is surprisingly high. I think wage growth at 3%, in an economy like this is still a bit disappointing, and we should be able to do better than that. But that's all the rearview mirror. We want to be looking forward now. And what I want to do is something a lot like President Bush did in 2008. He sent those checks out. It didn't stop the financial crisis, but we were better off for it. This time I think we should do something bigger. We should be prepared to expand it if the economy deteriorates further. We want to be comprehensive about the approach. Money for states, money to extend unemployment. I would pass all that now because it does take a few months for it to get out there.
And money for health care, Jason. That's another thing I would like to do with the money. I want to make sure that people who need a test can get a test. Right. People who need health care can get it. I think those are key things. I'm very concerned about small businesses that might have disruptions. I think we need to create a system by which they can be aided. I'm much less interested in helping out big businesses, though perhaps in the way during the financial crisis there was an argument for bailing out the auto industry. There might be assistance for the airline industry, though their balance sheets appear to be in good shape at the moment. That's an area I'm very interested in, extending unemployment insurance. Jason's idea, I'm a little reluctant on. He's got this idea of sending everybody a check.
I know.
And
send everybody a check.
You should read his op-ed in the Wall Street Journal today, which is, I think, a beginning of a discussion that we're going to have as a nation. And look, I'm getting a lot of hate mail for my $1 trillion call on Twitter. But it comes down to this. What's the role of government?
That's Steve Liesman, isn't it? What is it?
Just you, and that Joe, whatever.
I mean, if you want to get $1 trillion
Jason,
out there,
let me just finish, Jason. It comes down to this, and I'm sure my good friend and humanitarian Rick Santelli has different ideas about this, and I say that seriously. But is the role of government, which I believe it is, let the market function the way the market's going to function, and in extraordinary times when the government has the ability to stop real economic pain from happening, it should do so. That's my opinion of the way the world ought to work.